Hey guys, how do you feel about the new update on Bitcoin on the local and macro levels? As you can see, we've got some new information on the market from financial indicators. CPI data was revealed today, and it sounds kind of bullish, but in general, I think it is not that decisive yet. So let's look at it first. Let's look at Bitcoin. What we suggested in the previous videos for a month and even more that we were discussing here as Bitcoin reached our counter trend line with this spilling candle, and we were suggesting that we are finding some local or midterm support here, and we are going for the expansion, at least to this level that we held for half a year now, and which we finally lost. As you can see, we came to precisely to it, but this is not even the previous all-time high. The previous all-time high is somewhere here, but if we will look at the lower time frames here, we've got a very interesting and tricky situation, because as I told you before, the moment we lose this line, as it proved to be a solid support here, this, I don't know how much, 18,300, and it was a solid support, and I told you before, the moment we lose it and close below it, we are falling down, and we fell, and now we are retesting it. It's supposed to be a strong resistance right now, but maybe it is not. And also we have this higher 19,600. It is going to be somewhere closer to our, based on the exchange, our all-time high from the 2020. Also an important and strong level of resistance here. But if we turn on a few days ago I was talking, was sharing in my Twitter account that if we lose this level and close below it, probably we are going to go lower. And the expansion will be over. And we've got a little trick here. I wasn't shorting here, of course, but it was a tricky one, because if you look at the 4-hour time frame, we closed below, but then we reclaimed this level, this trend line, and the moment we did yesterday on the daily, when we closed above it, it was clear to me that probably the CPI report today is going to be a little bit facilitating, and we probably going further to this major resistance level. Why is it major? Because I told you many times before, and we've got an interesting situation here. Aside of the fact that we have a strong resistance here, supposedly, because the support was strong here, and we have finally a perfect combination, the symbiosis of super trend and Kijun shift resistances, and this is a strong indicator in my theory and education that I teach my community members from the private group. So usually when we cross this one, and if we break this one and retest it, if we don't dive back and close under, if we retest it and hold this support, we are probably going higher, much higher, and this becomes a bullish narrative here. But we have other indicators here, this is why this situation is so tricky, because this is the level that we held so much for some time, for half a year. This is going to be our 2020 all-time high, also an important strong resistance level, and that is why if we break it, we need to break it, I think, on volumes and with a high move, with a strong move, and then we will open the road. In that case, we would open the road to 22,000 first, then 24, and the maximum is 28, not higher, I think. But the thing is whether we are going to do that, and my grounds here are that the possibility is quite high, because on the fundamental aspects that tomorrow uh, federal the Fed is going to release its interest rates, and a lot of people expected the CPI to be 7.30 at least, but today the inflation rate fell to 7.10, and everybody and the market reacted accordingly because it is lower than the expectation, and a lot of people say it is the sign of healing, but I don't think so at the moment, because it is not. It is still a very, 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 very high inflation rate, very high, and the it is like, for example, and of course, and what we are expecting tomorrow from the Fed. The previous interest rate was 4, and prediction was that it's going to be raised to 4.5 by 50 bps. So, and apparently after this data, everybody expects we either are going to raise the interest rate as expected to 4.5, and it is going to be unexpected scenario, and it is going to be an overall bullish for the market, for the financial markets, or maybe we are going to be raised up to 4.25, or even the 4 is going to remain. And all these scenarios are going to be bullish for the crowd, for the masses. They are going to react bullishly on financial charts. So it is unlikely that we are going to receive 4.7 this time. That is why the probability of breaking this level is so high at the moment. And but if you want my opinion, I don't think that 7.30 or 7.10 have any difference. It is a still very, very high inflation rate. It is like when you are starting to cure some disease, and you've got some first reports of the analysis that you have the slightest enhancement in your health and your analysis. So it doesn't mean that you are cured already. So definitely, in my opinion, the interest rate hikes are not over yet. Even if it is going to be eased, it is going to continue to raise in the coming year, in the coming months. So maybe after some pause, but definitely it is going to be done, because even if you have the first signs of improvement, it doesn't mean you should stop taking the medications, yeah? And as we understand, under current situation of and the mechanism of working of our financial markets, the interest rate hikes is the only cure and medication that we currently have. So definitely they will have to continue to at least to increase those rates up to 5, I guess, in 2023. We are simply delaying this with this inflation rate data. So definitely we already, of course, this bottom market is not stable, and we've crossed many times this Kijun Sen, and we were talking about that this is possibly being bullish, but every time we cross them, I told you that this is not looking good, because look at this one. We found resistance right up under this Kijun resistance. Here we tried to break it, and we locally broke it, but that was not enough. We had no super trend resistance here too. The second one, here we broke again this Kijun Sen resistance, but we got stopped by the super trend, and it held here. But the moment we found Kijun Sen shift as support, we started the expansion here, and after that only we dumped here on the news of the FTX and other stuff. But here we got a perfect place where we can break it and become bullish actually in the midterm, and with the limit of 24,000 in my opinion, maybe even 28 but not higher. But I think 24 would be the highest. It is not it doesn't mean that I am bullish, not. And I think we are still going to go lower than our current lows at 15,500. Also, so tomorrow I'm going to watch this closely, because first of all, and let's look at from the weekly, and let's remove our indicators and look at this. We have this some kind of falling wedge here, and this is good. This promises some the start of the bullish market at some point, but I don't think it is going to happen very soon. So as you can see, our greatest resistance of indicators is positioned here upon this black line, 18,300, somewhere here. But as I said, our all-time high resistance is somewhere around 19,600, and this is the perfect reversals place for us. For example, tomorrow we are coming with the bullish interest rates news. We start pumping and we find this strong resistance upon this wedges counter trend line, and we get absorbed. That would mean a lot. That would have a great meaning for me and logic. And then we go a little bit lower. We don't know how lower, but definitely I wouldn't recommend anybody to trade upon this news, because they will squeeze both the shorters and longers. If you bought on spot, or you have long from these positions where we found this support local, then of course you can hold it, but definitely pay attention to what we have here. And we can have some fake outs here and get back if we start closing on the 4-hour time frame under this Kijun resistance again. Then it is bearish for me, and especially if we retest it here, and this is bearish, and this is for shorts for me, the signal for shorts. So also I would like to add some more trend lines. I can add them to find out what is going to be the resistance here also. As you can see, based on this week of this daily candle bar, can adjust it, and that would make sense with some fake out. Maybe we are not having it, we don't know yet, but based on the fundamental news, it is highly likely. So definitely to break this all these resistances, we will have to break this this counter trend line too, local counter trend line. If we see the reversal here and engulfing candle, then obviously what is going to happen here, we can also, based on this trend line, we can build that if we lose 16,700, we are going lower. Definitely it is bearish for us. So let's talk about the macro perspective, macro scenario here. Let's take a look at it. Let's also look at my 2020 trading chart that I used and I shared with you in my worst scenario video. And as you can see, I will remove all these lines from the video to see this clearly. This is my main target of accumulation, and as you can see, we talked about it before. we are approaching this level, this crucial level that I was talking about on other chart here, and now we have this the long trend line that we had. This is the chart of my trend lines from 2020, and they all work on any levels. So this is what I was talking about. We are approaching this huge resistance, trailing resistance line, and that would make sense both scenarios for me: rejecting here or reclaiming it. If we reclaim it, we hold it, then we probably could go higher, but also we will have strong resistance above here, and we will be back. But first of all, we have to reclaim it and hold it. If we get rejected, then the target is obvious to everybody, I guess. Somewhere 14, 13, 20, 12, 700. These are my levels that I would like to accumulate heavily. If we do not fall immediately, what is going to happen? Let's talk about high time frames and Kijun Sen shift and how we play it. Let's get back to our weekly monthly chart. Let's switch to the monthly chart, and first of all, let's stick with the weekly, and a lot of people say that it is hard to understand the technical analysis. It doesn't work on the bear market, but I cannot agree. It is the same for me as on the highs of the extreme bullish positions here. It is the same. If you proceed to the 4-hour time frame and daily, you will see a lot of uncertainties there, and squeezes into both sides, which can be figured upon this from these even weekly candles. This is for the purpose to squeeze both unexperienced traders and the experienced traders that know that it is time for shorts, but the market maker doesn't want to drag them with them and make them rich and lose money. That is why they have to mix even the decorated traders, so they would be confused and would be scared to short upon highs. That is why. And the same situation is here. You think that they will allow you all to buy here and lead you to the new highs and make you all rich? I don't think so. The thing is, the reason here is I know a lot of people that bought here, and they had a lot of time to do that. So do you think everybody is going to become rich? It is too easy for me. It is too easy. It is not like in 2018. In 2018, when we came here, when we fell under $6,000, a lot of people were inexperienced. There weren't many pro traders here. A lot of people were just newbies, and they were really scared, and even professional traders were scared about Bitcoin going to, as we called it, to zero. So this is completely different situation here. People, even if they scared right now, they still accumulate Bitcoin and other cryptos, altcoins, because they know that it is not going to zero. A lot of serious entities, and like BlackRock and others, they already jumped into crypto and made it a part of their business. So there's no way they are going to dump it, but they can go lower and much lower, and not everybody is going to be able to hold onto it. I think that the investors of this bear market, this cycle's phase, a lot of them are not going to bear this recession in crypto, because and they will start trading, and they will not get such fast and fascinating bull runs like we had before. This is going to be a very difficult road for the people to make their fortunes in the next few years. So definitely, let's look at the inverse chart, and inverse scale will prove you that it is the same. The way we are trading on the bottom, somewhere in the bottom area, just call it like that, here is the same as the highs, as we were trading on the highs. Let's look at it. What can we see here? Enable our super trend. Let's switch to the daily. As you can see, what we have, the thing that we were talking about. Let's switch to other more clear chart, I guess. Here, what can we see here? Does this look bullish or bearish for you? For me, this looks like a perfect support, break and go higher, and until we break this daily Kijun, retest it as resistance, then we start falling down. But that's for me, only for me. And super trend here too, as well, looks like a perfect support for me. This is the inverse chart. Look how precisely it works, the same way it works with the bullish run, but we don't know in which order it is going to happen. Let's switch to the monthly chart and it will tell you a lot. Let's start with the general vision here and we'll proceed to the next one, I guess. Which one is going to be the clearer one? Oh, let's assume this one. No, I think it doesn't have enough Kijun, monthly Kijun here. Let's switch to this one again. And enable our Kijun Sen shift. What can we see here? The thing that I was telling you many times already. We have reached the lower ranges mid and we are in uncertainty here, and that is okay. We can go two ways from here. We can stop close somewhere like here and we can do something like that the next month, or start with the descending, whatever. But we have this this month is either we are going to find a strong rejection here, somewhere here or here, as we already discussed, and we have cleared this space for us to go lower, even lower. As you can see, we made our expansion and we theoretically can go to 13,000 at least and find support here and get back up. But that is not guaranteed that we have to follow that. But no matter how we are going to move here, eventually in the next 3 months we are going to cross this monthly. We won't have the power to do something like that. I already explained it to you many times in my videos. So we are going to cross this monthly Kijun, and how the price usually reacts on it. We usually, let me remove this one. We will have limits here. Depending on where we are going to open here, we either go lower first of all, and then go back and go for the expansion, so-called, the same way we are going from the inverse chart. As you can see here, depending on how we are going to cross this monthly Kijun, and that will depend If we do this like this, we can start with some ascending there, but we will find Kijun as support here. We won't be able to drop below it. So after that we will have expansion, some kind of expansion, and only then we are going to dump towards this support, or this is the inverse scale, and then continue the growth or whatever. So definitely it doesn't matter. We are going to, in my opinion, we are going to trade in this zone for a long time, for from 3 to 6 months, I think, guaranteed. So if you are looking into investments and you don't know whether we will get lower prices, the ones that I mentioned here, as you can see, this marks an important and great resistance here for me also. Even on inverse scale, it doesn't matter. And as you can see, if you look at this inverse scale, would be, if it actually would be an ascending market, this would be a green candle. And what is happening after this green candle? Usually we either retest here or right from this spot we are now, we're finding support and we make the final move here. And the sooner we reached, if we reach these lows around 13,000, 12,000, then it would be better, in my opinion. Why? Because we would be able faster to cross this monthly Kijun support, as it is right there on the normal scale. We would retest it, maybe find some double bottom, and then we would be able to start the recovery. And until the June or August, we already would be in a bullish formation then. So actually going lower is in our interest, because if we do, let's switch to the normal scale, and if we start, let's repeat it again. If we go there right now, we're in the coming months we are going to switch it, and we are retesting it. We go start the ascending movement, and then we will have one drawdown, and then we can have the expansion for higher movements. If we start moving up right now and we are switching right here, we can make another leg up here, find some 30 EMA resistance out there, meaning not exactly like this, but it is hard to draw on the monthly chart here because the arrow doesn't obey you well. It is going to resist, and we will have another drawdown that is going to last longer. And even if we had higher, we would find resistance here and we would fall right there back to our supports, at least here, or maybe even lower. So definitely it is in our interest. So until the end of this month and in January, the dump would continue. That would be in our interest. In that way, we could hope that until summer we would start the bullish narrative, the bullish ascending and healing of the market. That would be a great spot to accumulate, of course. We don't know the precise numbers, but everybody has its own, and the market maker has its own plans. But that would be better if we went until the end of the year, and the beginning of the next year we would go lower. That would be better for us to cross this monthly Kijun. So these are my thoughts, but they are not guaranteed. But now you know the importance and how to react on the crossing of this on this monthly Kijun. If you don't know, if it doesn't look very understandable what to do there, simply switch into the inverse scale, and it will become much understandable. The way if we cross it, you see we find resistance here, we bounce for the expansion and go back. This is it. The inverse scale can be very helpful here. So I think it was useful. Good luck to you.